All right, traders, good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 19th. Mike Boutros with you on the horn. Hey, Jay, good morning to you, sir. Eman, DJ, Peter, Pooja, great to see you guys in the room early in the week. So we are getting the continuation of some of these moves that we were seeing last week. Dollar still holding key support as far as DXY is concerned. So I'm a little hesitant on the euro side to really press anything too hard here, but Aussie making a rip today, Kiwi making a rip today, Sterling holding the lows, nice move there. Dollar CAD continuing to slide, so you want to be a little careful there. I still like the downside, but there's just no momentum, so it's kind of got me concerned. We'll take a look at that as well. On the menu for today, guys, as always, DXY, Euro, Kiwi, Sterling, Dollar CAD will hit, Aussie dollar, gold is on the list, and then there's a setup from last week on Swissy. I did just want to touch base with you guys on real quick. Any other questions or trade setups? As always, feel free to throw them on the message board at any time, guys. Here's what we look like heading into the start of Tuesday trade. So I showed you guys this chart last night, super clean, 97.63 ends up being the 618, but just higher. You had that 2018 high, 97.71. Key region we were talking about. If you were with me in the webinar yesterday, we went over that at length. So Pooja says, good morning, Kiwi on the move, right? We'll take a look at that. Eman, good morning to you as well. But with the DXY, like a good spot, right? And this is the bottom end of that major, huge inflection zone, that pivot that we've been following for pretty much since the start of the year. So we're there, okay? We got the bounce last night, materialized a little bit, didn't quite make it to the weekly open, but here's the pullback again, 97.71, still support, converging dead on with the lower parallel today. This is our sweet spot, guys. This is the butter zone. This is what we want to see something happen. If it's going to inflect lower, give us the next leg lower. We are bearish, broadly speaking, in the dollar. That's your, press level. If we are to sort of pivot below that. As long as we're above it, though, I'm mindful of the fact that these pullbacks could find some support here. At the end of the day, it's near-term uptrend support. So it's all about this pivot zone for me. Still looking for reaction there. Ideal scenario does break lower. But to get into that, you want to be fading strength. And obviously at this point, the weekly open is essentially the weekly opening range highs. So 97, 95, essentially 98 is and would be considered a weekly opening range break as well. Okay, so it's setting up real nice. You got a really nice range setting right up against upslope support. At the end of the day, a close below 97.63 is what we need to really validate that push. And then you're looking for a move on 97.21, 97.30s. That would just be initial targets down here. All right, but I mean, there's not, as far as the weekly chart's concerned, there's not really much, to look at here. Here's what the DXY looks like weekly. Kind of just want to see a pivot and a close back below 97.87 on the near term. It's this zone right here. Any questions on DXY? We're going to kind of breeze through these today because a lot of these setups are pretty much the same. There's no data on tap either, essentially, for the U.S. until FOMC meeting minutes, which is tomorrow. But man, I don't really think that's going to give you much. You've already gotten some commentary from Powell after that. Yesterday's tweets with Trump with regards to his meeting with Powell and discussing negative rates, and this type of posturing brought a smile to our face. We were laughing on the desk. It's great. It's good. It's good comedy. But at the end of the day, I don't think the minutes are going to do much from the last meeting. So keep that in mind as far as event risk for the US dollar, and watch price action because it's been telling. Okay, depending on, obviously we have to pick and choose where we're looking here, but this is DXY. So where does that take us on euro? Here's what the euro looks like. Obviously, the 1082 level got taken out. We talked about that yesterday. There's a 50% retracement. Just higher, like just below 111 is slope. the upper parallel of this really clean pitchfork. It's the same pitchfork we've been following, guys. Here's what it looked like last night. All right, same pitchfork we've been following. Last night actually held that 75% line as support. It was ridiculous. See, look at this. Held the support, and here we are round trip again back on 110.85. This is problematic up here. This is the same type of inflection key zone that you're looking at with the DXY, and that's my issue. If you're holding longs, this is somewhere you want to pay close attention to. If you're looking for new positioning, it's not a long play to play into this, okay? Because this is sort of a major key pivot. So if it gets through 111.10, 111.09, that in my mind would validate the break and the reversal in euro. So you'd be looking for like 135, 111.35 and beyond, okay? But it's all about this pivot zone right here. Liken it to the 97.71 zone, 97.63 zone that we were looking at in DXY. Same type of key support, right? Here it's key resistance, and it's stacked up. And it's stacked up. You got former swing highs, you got former swing lows. Just a major pivot right here. And we've been following this zone. Add some, add a cherry on top of that. It's the exact 618 of the drop from the high they made in November. Well, I say November as if we're done. The high of this month. So just a nice zone. And again, in my mind, this is the break that would validate the downside bias that we've been sort of tracking here in the euro since the start of the month. So good place to expect some pullback. If you were to get a failure, or if you get a spike into this region and it would fail today, expect the corrective move lower. Ultimately, we still do want this to breach on initial attempt here. Be careful as this thing heads towards slope resistance just higher. Okay, so the levels are unchanged. We're still liking this setup a lot. Yesterday's like sort of swing low for US trade session came in at 110.54. I labeled that yesterday as near-term support. I still like that. 110.43 is last week's opening range high. I'm still working with that as near-term bullish inbound. I think Jamie's entry on one of his support targets is 110.36. I see where he's thinking with that. In my mind, I think if we get a little bit, again, my humble opinion, I think if we get that low, you're probably risking a larger move. But 110.43, 110.54, that whole zone, okay, that's where you're looking for entries if we get the move, okay? Sorry about that, guys. Okay. My Siri's picking up and starting to ask me questions. If we were to get the extension, that's where we're looking for, possible resistance. So, like in the upside, keep in mind I've been skipping through the sort of multi-time frame, guys, because I think I saw most of you guys in the webinar yesterday. Here's the thing with euro. There's not much to look at here, on the longer term weekly chart. I see what you're saying, but it's still the basic support bounce that we had talked about, 109.94, massive level of importance. Here's the rebound. On the weekly chart, it's a big old range. There's really nothing to do between, this zone except treat this as a range, okay? The daily chart for euro, there's that 111.09. That's the same level I'm talking about here. It's the same level I'm talking about here. So that's sort of, if we look at this on the daily chart, and again, it's been a very clean setup here as well, that broader pitchfork just off this year's highs, this was messed up here on the breakout and failed break. Reversal found 618 support. Here's the rebound. Okay, so pretty precarious things here. You've had a 4-day rally. I still want to see 111.09. You're heading towards near-term downslope resistance. For me, it's the pullback to get long. If you spike higher today and it fails into that parallel, I would be compelled to try to look for some sort of near-term short positioning just on the pullback play there. Ultimately, you want to buy that still, though. Questions on euro? That is number 2. I'm long at 110.03. Okay, excellent entry, well executed. Heading into this region is where I'd start to look, E-man, to take a little bit off. Now, again, I don't know your positioning, how aggressive you are in the position, and what you were looking to do with that specific entry, but you nailed it. This is your first sort of level of pay attention, pay close attention. You made it through the median line. Ideal scenario, it tags 111 at least a little bit, pulls back into 110. I don't know, 60s maybe to test just slope support again, and then it sort of vaults through. So I'm not sure how long of a position you're trying to take on it. You're at the top end of the range heading into 111. You're at the top end of the range heading into 111. Okay, and the top end of downslope resistance. All right. If you're long from that level, you bail on a stretch to 110.93. I'll try to scalp it short to buy it back. 110.93. Yeah, okay, into the upper parallel. That's how I would play it. That's how I would play it. That makes sense. So you're more than welcome. Here's what it looks like on the 60-minute. Yeah. Okay. Next up, Kiwi, number 3. So I know Pooja is excited about this one. Here's Kiwi Dollar Holdings, that breach above 64.10, 64.11. You guys remember, here's the setup and how it looked last night. We've been following this one for a while. Here's last week. When we first start to sort of track this downslope, we were looking for that 618 support. This was the zone that we needed to see. We even talked about it. 64.11 was sort of the first initial resistance. We need a breach above 64.24, 28 to fuel the next leg higher. We're testing that right now. Okay, so this is the second level or second target. There was the first target. Here's the second target. We're there now. Here's what it looked like last night as we were coiling up just below this resistance. And it's really nice when this happens early in the week, because you have your weekly opening range high setting up right below level of resistance. And that was 64.11, a 618 retracement, slope resistance. If we see the break, what do we want to see? The accelerated kick. Here it is. Topside breach, right up into 64.24, 64.28. For me, this is the level we need to break, especially on a closed basis, to get validation of a reversal, larger turn here in Kiwi to the upside. Remember where we are in the larger picture for a New Zealand dollar. Here's the daily chart. Okay, we're holding that 75% line, downslope resistance. Here's what it looks like now, right? We're breaching through, but there's that level of key pivot that we talked about, 64.28, 64.24. One thing I'll also note, okay, specifically here with Kiwi. Kiwi tends to do decent with the outside reversal pattern. The outside reversal off the high, taking us lower. I'll give you an example just recently right here this month on the 4th. Really nice big old outside reversal candle off the off the highs, moved us lower. Right here, we're already poised to make an outside reversal higher into highs, which is resistance. Pooja says, I'm long from 60 to 78, but could not add. Okay, so you're sitting in a nice position from here on, Pooja. This is what I'll tell you. Near term, for me, it's still all about this same pivot. It's still all about this same pivot. Now, things that are encouraging is that you've made it through the monthly open. So your objective monthly open has broken. Um, but I need to see some sort of reaction here today. An outside reversal candle into this resistance level, if this holds, for me, would actually be very, very like threatening of an exhaustion trade for a near-term pullback. We'd have to reassess that. Now, again, you're positioning your ideal. I'm assuming you're trying to sit in that for a little bit. But this would be the pivot point that we're looking for. At the same respect, what I always tell you guys, if this is going to break, we should see an accelerated pop through this today. Okay, so for me, it's all about this zone. This is it. Next upside target, if we do get through this 64.50, just a soft target, it also converges on the median line of this near-term upslope we've been following in Kiwi. It'd certainly give us a nice little inflection zone there if we get it, but those are the levels. Here's the 240 just to give you a broader picture, right? Super clean. I mean, he had a raised ceiling there, which was kind of annoying, but that's your next level. It's all about this zone right here. And again, this is your 2018 October lows. And a basic 38.2 retracement of the yearly range, essentially. I'm sorry, of the July decline. Let's take a look at closer price action here for a sec. Here's the 30-minute. We're way in overbought condition, not a reason to do anything per se. Okay, look for support at 64.10 again on a pullback, maybe even a little bit deeper into this zone if this is going to hold. And I would just highlight that at this point, you kind of want to make the weekly open your near-term bullish inval on this push higher. So 64.03. So essentially below 64. Would be bearish inval for me near term, or a bullish inval. I would not want to see this thing settle beyond that. Make sense? I mean, at that point, you're risking like 63.80, which is the weekly opening range low. That's another 20 pips lower. I'd rather not just sit in a trade if it comes against me. But those are the levels here for Kiwi. Any questions on that? Focus on 64.30, let's call it 64.28. Look for a close above that to mark resumption. If it fails, and you're making an outside reversal at the highs into resistance, this could be a near-term exhaustion trade. We look for that setback. Ultimately, we still could get a better long position, but I think you'd threaten a larger setback if that materializes. And that, my friends, is Kiwi dollar. If we come back to 64.06 or so and break higher, then that break would be a buy. Yeah. I think if you settle back towards 64.06, if it breaks higher from here, yeah, 64.50 is your next upside target, Pooja. Yeah. Ultimately, well, let's take a step back, right? Ultimately, I want to see a move up into here, into this region. Okay, the upper parallel of the daily structure. Here's what it looks like on the daily chart. Don't forget, this is why we always keep this in mind as well. The upper parallel converges on a 1618 extension, and the 50 of just this decline with these lows all converge up into 64.80s. So ideal scenario, that's where you see the larger inflection and the larger decision, as it were, to trend in Kiwi. Um, but yeah, I mean, that's just like shy of 65. We're talking 64.80s on the upside. Does that make sense, Pooja? And here's Kiwi on the weekly chart. Kind of going a little out of order here, out of whack, but here's the pivot. 64.30s was actually the close low for 2018. We're looking at the stretch lows for 2018 on the daily chart, but you get the picture. Look at the median line for this pitchfork. We're still right there. All things held constant, Kiwi's coming in some pretty big areas. There needs to be some acceleration soon to get through this. Pooja says, yes, my target is 64.85. Thanks. You got it, Pooja. Well done. That's a nice trade right there. Well done. All right, Sterling, number 4 on the session. Here's what Sterling looks like on the weekly chart. Y'all have seen this one before as well. We're slap in the middle of a big old range, 27.50 into 130.70. That's the whole universe for Sterling over the last 6 weeks. Here's what it looks like now on the daily chart. Yesterday, we tried and attempted to push through the monthly opening range highs, which were right here. When we talked about that 29.90 level, which is a target that we were looking at back in October on the rally. That's where this thing fizzled out. I think we just got register high right above 130. Was it 130.13 is where the high registered, then we pull back. Yesterday was a full round trip. So here was the pullback early in the month. Yesterday, we went right back to the monthly range highs, tested it, and pulled back. I was talking to you guys about this in the webinar because, it was truly coming right into that key area of resistance. Here's Sterling. Here's Sterling, guys, just one day prior. Okay, we talked about this zone right here, 29.76 into 29.90 being, that's the major zone. That's the inflection. That's where we'll get clearance up to 30.76. We need to see, we need to see that break. So yesterday we came right into it. We ripped right into the open. We were there trading right after, the webinar. We were pulling back. So that was the zone to watch. That's still the zone to watch. We pulled back and tested monthly open support off that region. Weekly open support off that region. Here's what it looks like. And here's what it looked like yesterday. Boom. We registered high at 29.85, right in the middle of that zone, and then pulled right back. Again, if you ever have your doubts about technicals, or you ever, kind of question our methodology, here it is in play. Okay, here's the weekly open support still holding. You now have a really sweet setup. It's a very clean weekly opening range just below key resistance. A topside breach, you're looking for 30.76. A downside break, you're risking 28.66. I don't want to see that. That's the swing low from Friday. If we get any lower from that, you're challenging basically a break of upslope support, right? So I'm more inclined to set 28.66 as our near-term bullish inval, but if we were to spike lower into 28.18, I wouldn't necessarily look to jump on the short side just yet either. So I hate to be a little wishy-washy with you guys, but with the Sterling trade here, I think we need to leave some room for the whipsaw, for the spikes, because of all the, headline event risk that comes down just from dissemination of all these commentary. That being said, all things held constant, we want to see support on any type of weakness. Ideally ahead of 28.66, that's our bullish inbound. But this is the pivot we need to get through. 29.90, 29.76. If we get through this, you got another 100 pips to the upside. In Sterling, I think. Questions on the pound? All right. Dollar CAD. Here's what Loonie looks like. So the 3190 target finally hit, but not by much. Here's dollar CAD on the weekly chart. Let's just play it from the start down. The only thing I wanted to highlight here is this is a very clear chart indicating the 618 retracement and decline off the highs that he made back here in September. Really nice move. Last week we noted on Thursday's up or on Sunday's update rather, we noted that dollar CAD had essentially posted a weekly doji right off of Fibonacci resistance. That's typically a little bearish, right? There was no momentum in it though. The intraday chart, not the daily chart, there was just no momentum in it. So the weekly chart, just wanted to highlight that 618 and last week's doji off of resistance. Here's what it looks like. And again, for anyone who doesn't know, doji is just, we opened the week and closed the week at the same level, okay, despite the intra-week volatility. Here's the daily chart. Again, highlighting just slope within that range that we were following, giving us the kickback. No closes above that 618 on a daily basis. Here's what it looks like on a line chart. Pay attention to these things, right? Pay attention to these things. So wasn't able to close above it. Here's the pullback. All right, cool. Well, here is the intraday. Okay, this is the 120. Again, it was a slow burner. You know what I mean? It didn't give us much before. This is what it looked like on the 17th before we had structure to the decline, but the levels remained unchanged. We were sitting at 32.16. That was near-term support at a basic 236. Looking for the buckle lower, 31.96, 31.83 are your next downside targets. You got 31.96. A pitchfork that we added on yesterday looks like this median line's holding support, holding support, holding support, holding support, holding support. Near-term resistance now, yeah, I just set it to the weekly open. That's 32.24. Okay. At the end of the day, if we clear this pitchfork, if we clear a basic opening range play to the upside, like 32.35, I'd let it go. I'd let it go. Dollar CAD's been super, super, super just stubborn sometimes, so I don't want to get too wrapped up in the pullback. But this is sort of your near-term support zone right here. Look for resistance at 32.22, bearish invalidation at the objective weekly opening range highs. So I play this one pretty close to the chest, and the ranges are just too tight for me. It's just really like annoying to sit in a trade for all this time for like 16 pips. So it'll give us a play at some point. Just looking for a reaction basically right down here in this zone. A downside break from here in 3150 is just a soft target. 3150 is going to be a larger target right here. It's the 618 of the advance off here. This is the July low, and it's going to be the 50% of the advance off of just the last couple of weeks here off the October lows. So a nice confluence region. More importantly, the objective monthly open, where we opened the month, is 3163. So 3150s, 3160s, that's your like big sweet spot for the downside if we break this near-term support zone in dollar CAD. Again, ideal scenario, you get a little bump, maybe test weekly open, maybe 32.30. I don't even want to see that, to be honest with you. And then we resume lower. That's just ideal scenario. If you're holding shorts from anything north of 32.30s, I'd have a break-even stop. Or anywhere around 32.30s. If you're holding anything north of 32.30s, I'd have a stop just above that 32.40 region, maybe just above the weekly opening range highs, and see if we can't get that downside break. Questions, comments, concerns on dollar CAD? All right, here's Aussie number 6. So also a nice ripper here, very similar to what we saw in Kiwi in overnight trade. And a little bit deeper, you guys remember we were talking about this? I was very kind of wishy-washy yesterday because I wanted this low to hold. But then the low that we got in overnight trade yesterday looks pretty darn good. Looks pretty darn good, and it rebounded in momentum right around 40 is what you want to see. We blasted right through the weekly open. Here's your first target. So a little bit deeper than we would have wanted on the pullback, but man, it still looks good. It still looks good. This is your first level of resistance, 68.30. This was the second target from our rebound here. The first was 68.10. This was the second target. Watch for reaction here today into the open of US trade session. Here's what Aussie looked like earlier in the week as we were opening Sunday. We were looking for that stretch into 68.30. That's why when we first got the pullback, I got a little concerned. Again, here's what it looked like. Got a little concerned, but we wanted to see this slope hold as support. And that's exactly what happened. Support, tested again as support, former resistance, right? Held, and we took out 68.30 just here this morning. Okay. Next upside target beyond here is going to be 68.50. It's only 20 pips away. The big next Fibonacci lateral level of resistance is going to be 68.68. That's a bit higher from where we are right now, but it looks good. It looks good. Point being, you're heading into the US trade session at resistance. Just know that. Near-term resistance pivot. So watch for the pullback. 68.11, right back at you. Same level. Guess what? Right above that, just pips higher, is the objective weekly open. So yeah, a good zone to watch for near-term support. Topside breach, you know the levels to look for. Now, typically on a move like this, I'd start to look for slope. Okay, something to give guidance to the nature of the advance, to the slope of the advance, to the gradient of the advance. And you look at something like this, well, the parallel basically puts you at resistance here as well. Don't get too excited, right? On the long. So if you get some kickback here, shouldn't be too, wouldn't be outside the realm of possibility. You look for repositioning. You look for a constructive move, constructive stance still while above here. Interestingly enough, that ends up being like the 2-hour close low, right? Just below 67.90s. And then obviously, if you see this breach, what would that mean? Well, it would be a break of a basic 38.2 retracement. Well, that's not a big deal per se. It'd be a really nice pivot break in price. Look at this zone. Resistance, support, resistance, breach, acceleration, breakdown, resistance, breach, acceleration, break, acceleration. Okay. You also have the median line for this pitchfork, which would be, again, an accelerated pop if you get it, and upslope resistance, which, again, a breach of upslope resistance typically is accelerated. That's all to say, guys, that with everything lined up at 68.30, if it pops here, it should run. It should really run. This should be an accelerated move. Shouldn't be like a meander kind of break. Make sense? Love Aussie. Loving it. Okay. Hi, Mike. Do you have Aussie yen on your list? Looking for a long near 73.70. You know what? I don't, but let's take a look. For Aussie yen, huh? Yeah, the yen crosses for me are like treacherous. Euro yen is the extent of the one I'll trade the most, but let's take a look at what's going on with Aussie yen. You're in the right place, mate. Let's take a look. Hey DJ, what's that 73.70, man? What are you looking at there? Is there a specific level you're looking at there? Is there a specific threshold? A daily pitchfork. Whoopsie. Oops. DJ said daily pitch 7th of August, 13th of September, and what was that? October 11th? Well, I have October 10th, probably just a time zone different. Same exact levels I just mapped out. Great minds, DJ. Great minds, my friend. 50% retrace of the October stretch. Okay. Yeah, give me a second. I'm getting there. I just want to see what the daily range looks like. Oops. The 38.2 of the yearly of the stretch off the low. That would be a little bit more compelling. Um, as far as retracements and convergences are concerned. Okay, that low day close doesn't really turn me on, so we'll go ahead and have this is the monthly open, guys. Hmm. Here's your monthly open, right? Well, it's certainly a compelling case that you're coming off of big support. Okay, 73.50 obviously was a level of significance, being the 38.2 of the entire advance off the yearly lows. You had slope support there. Uh, One thing I would say, we both got excited about looking at this pitchfork right here. One thing I would say, DJs, we don't have too much. I wouldn't say we have a strong conviction on that slope just yet. Okay, it's nice that this held support, and you can get all excited about that. We can kind of put ourselves in a false sense of confidence in it because we haven't gotten too many inflections just yet. I mean, there's some nice inflection here, obviously here. I would have liked the highs again to be a little bit cleaner, but maybe I'm nitpicking. In any event, um, I do like the idea, the concept of a rebound here. But your initial support, your initial sort of first focus is just higher from where you are right here. Yearly open, excuse me, monthly open comes in at 74.47. You're 20 pips away from that. Upslope on the weekly too. On the weekly as well. I haven't taken a look at the weekly in a while, but you get the picture of what I'm saying, right? Watch out here. Here's the weekly. I guess I must have looked at this sometime soon. I guess this is a real near-term pitchfork. What is this? A modified pitchfork? Let me see what that looks like on the daily here. Ah, it's the same slope almost that we're. Interesting. So a modified pitchfork off the low gives you almost the same slope, but I think we had the better idea here. So let's just stick with this one for now. Crude at an important level here, 56.56. Hold would be a long. Break could be big, says Pooja. Yes, I did want to go over crude. I'm not sure I didn't want. Oh, and I didn't go over dollar Swiss really quick before we end the session. Here's I'm getting tangled in my wires. Here's crude on the weekly chart, or this is the daily chart. This is the thing I've been looking at on the intraday. Okay, so you're testing last week's opening range lows come in just a hair lower from where we are right now, basically just below 56. Yeah, if you get that, it would be a break of this near-term upslope that we've been following in crude prices. I agree with that one. Also, so far, yesterday I was watching this like a hawk because it was close to posting an outside reversal candle. We didn't quite make the reversal per se, but the body was engulfing of the previous one. So it's a bearish development momentum. If you notice here on the daily chart, also held 60 pretty darn good as resistance all week long on building divergence. So all the hallmarks are there. Looking at this on an intraday level, it's the first time that you're dipping into oversold territory since back here. So the onus is really on this thing to continue and push and give us the sort of resumption lower. One thing I do want to do is just add a sliding parallel here and see if that it's kind of give us a little bit more conviction on the break if we do get it. All right, so like a sliding parallel off that low, right? Kind of gives us a little bit more of a hesitation to down here. Again, this is last week's opening range lows. So watch this region, but I agree with you. If this breaks, yeah, it could be a nicer move lower here in crude prices. So feel free to take a picture or snapshot of that if you need. Also, we'd start to look at this point. It's too early, right? But if we would start to look for possible slope, okay? And a look at slope also suggests near term, if this thing were to spike early into US trade or mid US trade today, and you hit that median line or you spike into this parallel and you get a rebound, it might offer a better position for us to get on the short side, actually, if this is going to be the break. But you get the idea of how we'll structure this trade if we do get the break of this upslope support here. Make sense? That is crude. So that's number 6. Number 7. We didn't hit gold. Here's what gold looks like right now. It's messy. It's flirting with a topside break of the descending formation that we've been looking at. There's really no trade for me here as far as the near-term chart's concerned. Remember, this thing is on, it's well warranted for us to be a little more hesitant in doing anything in gold because of where we are in the broader picture. And we've talked about this for a long time, guys. 1451, 1461, we rebounded off it. It's a big zone. You don't want to get overzealous on the rebound still. But at this point, I think there's room for pause. You came to a big support zone after coming off of massive resistance. This ping pong play right here, I think you're going to get a little bit more consolidation sideways to higher price action, but you want to use some caution here. Okay, key levels on the weekly charts like 1490 on the upside, 1451 still critical support in the downside. Here's what it looks like on the daily chart. Yeah, I think there's going to be kind of an exhaustive trade here. And by exhaustive in this sense, I don't mean like an exhaustive fade. I mean just like, volatility might kind of just like, you might see a little more of this, right? Big stretch into big support, bounce. What are we going to do from here? Well, The immediate focus, like I said yesterday, guys, is 1472, 1461, like this $10 region right here. I think personally, you get the topside breach and you get a little bit more of a recovery, but we'll have to assess whether this low is kind of the end, the extent of this pullback. And then on the weekly chart, you're looking back for resumption if you get back up here. We'll see. We'll see. For now, I think you look to play this near term, this setup. Here's what it looks like. If this breakout is legit, we had a really nice descending formation that we were in for a couple weeks. If the breakout right here is legit, you should stay constructive near term while above this zone, 1460, 1461. And, we're looking for a stretch higher, maybe 1480. Okay, 1489 would be an ideal scenario. And I think at that point, if you get to 1489, possibly you start to look for, a possibility for an exhaustive trade on the long side or on the short side as far as trying to fade the strength. There's just no formation here. I looked at these slopes this morning. One could make the argument, for a setup like this, right? And be like, oh, well, that's kind of too touch, here's too touch, and that. But either way, what does it do? It still converges on the same exact levels in price and time that we're looking at. So I do think the path of least resistance is for a little bit more of a pop higher. That's all contingent on price holding 1460. Pooja says 2 legs up is 1485. I looked at that as well, Pooja. So I'm assuming you're looking at this. So if it's where is my extension? All right, I see what you're looking at. 1485, right on the dot. You're absolutely right. Didn't converge on anything slope wise. I mean, I guess if you bring this parallel back, it actually does look like it could be a play right here, maybe into tomorrow, right? I'm with you on that. Could be. But in any event, Pooja, what does that all suggest? It all suggests that the path of least resistance is sideways to higher near term, right? And it's funny, just as everyone was starting to scream because gold was coming off like for 2 weeks. Oh my goodness, oh my goodness. Now here we are looking at the upside again. It's great. It's great. I just don't like where momentum is on the near term. I don't like this ping pong 30, 40, 30, 30, 60, 30, 60. Like this gives you like no tell. But from a price point standpoint, as long as you're above 1460, I think the path of least resistance is higher. Okay, you could probably even scratch this 50. This is a soft target. It's why I have it lighter in color than the 38 and the 50 and the 618. Now that we've added that 100, 1485, 1489, I'd be watching this zone more importantly if we clear this. Remember what I told you, the levels remain unchanged, guys. The levels remained unchanged. 1472, okay? It's still all about 1472. It always has been. 1472 is the break that we need to clear the way for the larger move. The October open, the 38.2, last week's highs. I think it's clear. I think if you clear that, if you pivot through that, you're looking for that extension higher. Okay, so that is number 9 in gold. And last but not least, Swissy. I don't know if anyone's been on this piece, but we are nearing slope resistance. And this is the same exact slopes we've been following from earlier in the month. Here's what it looked like on the 14th into the close of trade last week. We were looking for a tag of the November open. Didn't quite get it. We turned just a couple of pips ahead of it. And the reversal ran into and turned ahead of slope resistance. So our bearish invalidation was 99.28. That was just a swing low from last week, guys. We came this week and we just tagged right here, 99.18, basic slope resistance of the same slope we were following. The positions are the same, and the setup is the same rather, and the levels are the same. Near-term support, Objective November open, still going to be down here. Still going to be a 98.64 tag. That's what will be the break. That'll take you back into yearly open support, and that's 98.38 key support here for Swissy. Remember, we're just treating this range. Don't forget. Maybe I should make this colors a little bit more prominent, right? But you get the picture. The whole focus is still on this massive consolidation. Okay, you're right slap in the middle of that consolidation range right now. Just happens to be slope resistance. If you tack on a quick retracement of this decline, the 50 is just higher, 99.23, right? I don't know if that's going to help you. It's an interesting setup. It's an interesting setup. Watch this near term. Watch this near term decline. Eman says heading into tomorrow's FOMC, will we have any economic projection? No, Pooja. Tomorrow, it's just the minutes. It's just the meeting minutes of the last FOMC policy decision. So no, there's no economic projections or anything. That wasn't a quarterly projection meeting. That was just a run of the mill, um, decision. We'll get the commentary and the discussion that was happening internally, but there won't be anything with regards to new economic data or projections. Okay, it's just the release of the minutes. Yeah, you got it. Tomorrow you do get some CAD consumer price index, which could push the CAD around. Heading to the end of the week, you also do have some commentary from Polos, who will be talking in Canada, in Toronto about some stuff, and then you have Lagarde towards the end of the week as well, who will be speaking, who obviously is the new ECB president. But nothing as far as major economic data for the U.S. I think that we have to be too concerned about. All right. All right, guys, that's everything that's on my list. Any other questions or trade setups, feel free to throw them on the message board. But I think you guys have a good picture of where we stand here. A lot of these setups are at really nice levels. Again, here's Euro holding resistance. Here's Sterling, really nice range. Here's Swissy at resistance. I don't even look at dollar yen. Here's dollar CAD finding that bounce off 31.96. Again, weekly open comes in at 32.22. Don't forget that one. Aussie dollar at resistance 68.30. Confluence resistance. If you're holding longs, this is where you want to take a little off. If you're looking for an exhaustive trade near term, this is a near term pivot I'd be looking at with great interest. And obviously Kiwi dollar still looking at that resistance at 64.28, 64.24. Again, if you're holding longs, I know some of you girls or ladies, excuse me, in the room are holding those longs. Watch that position. Gold constructive above 1460. Still looking for that 1472 breach to give you any type of meaningful play to the upside towards 1480s and above. That's a mouthful, but a quick summary of what we covered. Any other questions, feel free. Otherwise, guys, have a great trading day. Best of luck today and tomorrow. Watch the minutes tomorrow. I don't think anything major will come of it. It's at about 2 o'clock here Eastern United States, but just watch because there's always the risk of commentary there. All right, guys, best of luck trading. I will see you on Thursday. Cheers.